Welcome, trader. In this video, I'm going to guide you carefully, step by step, through the real foundations of Forex trading, supply and demand, and how these zones connect to the familiar concept of support and resistance. We'll break down how to spot the zones, why they work, why they fail, and how the market's biggest players use these areas to their advantage, sometimes to trap you. And we'll tie in lessons from some of the greatest trading films of all time, because stories stick. And you will remember these lessons better with the help of a few movie quotes sprinkled in. Pause whenever you need to and jot down notes. I want you to leave this video with practical tools, not just ideas. And comment where you're watching from, because next time we'll go deeper on how regulations and brokers in your region change your trading decisions. Let's get started. Chapter 1. What is supply and demand? First things first. Supply is where sellers overpower buyers. Demand is where buyers overpower sellers. If you only remember one thing from this section, remember that. On your chart, a demand zone is a place where price left rapidly in a bullish direction, leaving unfilled buy orders behind. On the flip side, a supply zone is a place where price fell hard, leaving unfilled sell orders. In the simplest terms, the market rushed away from those areas so quickly that traders didn't have time to get filled, and they will remember it. Imagine a massive sale on sneakers where people fight to get pairs, but some leave empty-handed. Next time the store reopens at that price, those same people will be back to buy. That's demand. Flip that to supply. Imagine panic selling on a rumor. The store dumps its inventory, price plummets, and leftover sellers wish they'd sold more. Next time price bounces back there, they'll try to sell again. That is your mental image of a zone. Chapter 2. Why do zones work? Let's think clearly. Zones work because price is memory. Markets are auctions. People remember levels. They remember fear. They remember greed. That memory is baked into price. When a demand zone forms, it means price was too cheap too quickly. When a supply zone forms, it means price was too expensive too quickly. Price will often revisit these places because that is where the leftover business is. But, and this is critical, zones are magnets, not magic. They attract price, but they do not guarantee perfection. Write that down. Zones are magnets, not magic. Chapter 3. How to spot a high-quality zone. Let's turn you into a forensic chart detective. A high-quality zone should have these 5 things. A strong impulse move away. A clear break of a recent structure. A fast rejection from the area. Minimal retests. A higher time frame confluence. Example. If the 4-hour chart breaks a lower high with a powerful candle and price takes off, that base is a potential demand zone. If the 1-hour also supports an uptrend, that adds confidence. Multiple timeframes lining up is one of the most powerful ways to validate your zone. Chapter 4. Support and resistance. Familiar, but misunderstood. Let's talk about something even more common. Support and resistance. Support is where price bounces up. Resistance is where price bounces down. Every trader learns this early. Lines drawn across swing lows or swing highs, and they work, sometimes. But here's the lesson. Support and resistance are the public face of supply and demand. They show where prices turned in the past, but not why it turned. The why is supply and demand. A resistance line is really a price memory where sellers once flooded in. A support line is really a price memory where buyers once flooded in. Movie moment. Boiler room. Ben Affleck's character yells, "Act as if you're the president of this firm!" That is exactly what traders do with their lines. They act as if support will hold no matter what. They act as if resistance is permanent. But the market doesn't care about your confidence. If the conditions change, it will break your line without apology. So never treat your lines like law. They're guides, not guarantees. Chapter 5. Why zones and support fail. Let's break this down honestly. Zones fail all the time. Support fails all the time. It's normal. The market is always hunting for liquidity. When a zone forms, traders place stops near it. Those stops are fuel. And big players know exactly where the fuel lives. That's why price will sometimes break through your demand zone, sweep the stops, and then reverse. It's deliberate. Movie moment. Margin call. Eric Dale warns, there's a lot of money to be made by taking risks, but there's even more to be lost. That's zones. You risk trusting them, but if you don't manage the risk, the market will punish you hard. Chapter 6. The power of liquidity. Liquidity is the market's blood supply. If big traders want to execute, they need orders to match against. Where are the easiest orders to find? Around zones, around support and resistance. So they push price into these areas on purpose, collect stops, trigger panic, then move price in the real direction. Movie moment, rogue trader. Nick Leeson famously said, I can make the market go wherever I want. Of course, that's an exaggeration, but big players do push price to where orders sit. They hunt your stops because you leave them in predictable places. Chapter 7, the fractal truth. One of the biggest breakthroughs you will ever have as a trader is to realize the market is fractal. That means patterns repeat across time frames. A demand zone on the 1 minute might be part of a bigger swing on the 1 hour. The 1 hour might fit inside a massive 4-hour structure. Always zoom out, always zoom in. Ask, what is the bigger story? Movie moment, The Big Short. They said, truth is like poetry, and most people hate poetry. That's what fractals feel like. Messy, overlapping, complicated, but once you see the pattern, you cannot unsee it. Chapter 8, Support, Demand, and Human Psychology. Let's connect these concepts clearly. Support is the visible layer of demand. Demand is the invisible reason why support holds. Resistance is the visible layer of supply. Supply is the invisible reason why resistance holds. If you only trade the lines without understanding the orders behind them, you will be fooled. Think of it like a magic show. The line is the stage illusion. The real trick is the supply or demand that powers it. Movie moment, trading places. They yell, buy low, sell high. It sounds silly, but it is the core of demand. People panic sell at lows and smart money buys. People panic buy at highs and smart money sells. That's the entire rhythm of trading, repeated forever. Chapter 9, how to build a zone, step by step. Let's go practical now. Step 1, identify the higher time frame structure, trend direction. Step 2, wait for a break of structure. Step 3, identify the impulse move. Step 4, mark the origin of the impulse, the base candle. Step 5, wait for price to return. Step 6, confirm the reaction. Wick rejection, lower time frame break. Step 7, execute with your risk plan and journal the result. That is a clean framework. Repeatable, testable, not random. Chapter 10, common pitfalls to avoid. Be honest, you will make mistakes. I do too. Here are the top mistakes I see. Drawing zones too tight, ignoring higher time frame direction, entering without confirmation, moving stops after a break, treating a line like gospel. Fix these early, and you will save yourself so much pain. Chapter 11, Chart Walkthrough Imaginary. Let's do a quick walkthrough together. Imagine price is in an uptrend on the four-hanch. It breaks a recent high with a big impulse candle. That means there was a shift in structure. Drop down to the 15-minute. Find the last consolidation before the push. That is your demand zone. Wait for price to return to that area. Look for a 5-minute bullish engulfing pattern. Set your stop below the zone. Target the previous high or beyond. Simple. That is how you build confidence. Higher time frame structure, clean zone confirmation, logical target, no hero trades, no gambling. Chapter 12, Journaling Zones. One thing pros do that beginners ignore, they journal every trade. Every zone you mark, record. Did it hold? Did it break? Was it retested? Was there news? Was the structure clear? This habit will build pattern memory in your mind. That is more powerful than any paid signal group ever. Chapter 13, Trading Psychology with Zones. Let's talk about mindset. Zones can feel safe. They look so perfect. But you must remember, they are only guides. If you become emotionally attached to your box, you will refuse to exit a losing trade. You will revenge trade. You will break your rules. No zone is a prophecy. Say it out loud with me. No zone is a prophecy. That will keep you humble. It will keep you alive. Chapter 14. Closing reflections to movie reference. Let's tie up with one last look at those movies. Margin call. Risk is hidden until it explodes. Boiler room. Confidence is a double-edged sword. The Big Short. Truth is messy. Rogue trader. Big players manipulate your expectations. Trading places. Fear and greed power the whole game. Chapter 15. Final thoughts. You made it this far. That means you want to trade like a professional, not a gambler. Like this video? Subscribe, comment your country so I can tailor the next lesson to your market. Next time on this series, we will break down a live chart applying these same rules step by step so you see how it all fits together. Stay curious, stay disciplined, stay dangerous.